is option, what is call option, what is put option. So if you don't know what is call option, what is put option, or what is derivatives, you need to first try to understand that, then come to this video. So this video is all about making you understand about which option strike price should I choose to trade an option, whether it is an index option, whether it is a stock option. Okay, let's go one by one. So let me make you understand there are three types of options. There are three types of strike prices. So one is called as at the money option. So which is also called as ATM, which is also called as ADM. At the money strike price, which is most widely used option for trading. So there is another option type which is called as in the money option, which is called as ITM, Similarly, there is one more option which can be called as OTM, which is out of the money. So these are the basically mainly used the three different types of strikes. So while trading in options, so let me explain one by one in detail for you. So let's say example, index, Nifty index. Let's say now, let me open a Nifty index chart right now. So this is a Nifty index chart. So if you see here, Nifty index is moving like this, going up, coming down, going up and coming down, and going up and coming down and heading up. So this is the current price which is running. What is this current price which is running? On the right side, if you see, this is 18,157. 18,157 is the price which is currently running. So whatever is the current running price, nearest strike price to that price which is currently running, which is called as ATM, at the money strike price. Means wherever the price is moving. Let me give you an example here. Let's say if a index is moving like this, and I am looking to trade at this point, for example, there is a strike price here, and the index is just moving like this. So this price where the index is just starting to move, which is nearest strike price, which is called as money strike price. So let me draw this for you. If I draw a line here, this is at the money strike price. So I always recommend to use at the money strike price, because this is where the price is moving currently. And let's say now the price is below here. For example, the stock is trading here, the index is trading here. There is another strike price which is here, which is called as in the money strike price. Means the stock has already moved up. The price has already moved above this. So it is called as in the money. Means already price is already moving above the price, which is the strike price which is mentioned here. So this is called as in the money strike price. And the strike price which is away from the price, means what is the current running price, and there is a strike price which is away from it, which is called as OTM option, out of the money option. So I always recommend everybody to trade in ATM, because ATM has the very good movement, and also the delta of ATM will be 0.5. Most of the times the delta of an option which is at the money strike price, which will be 0.5. What does 0.5 delta means? 0.5 delta means one point movement in an index or a stock can give you nearly 0.4 to 0.5 points of movement in the option premium. That is the reason I always suggest to trade ATM option. And also, when to trade in ITM? In ITM, trade when there is expiry. During the expiry date, means whenever there is a weekly expiry, there is a monthly expiry, always trade ITM on the expiry days. On all other days, you can trade ATM. Avoid trading OTMs. OTMs are risky because they're out of the money. Means you always know that at the end of the expiry date, if the price doesn't move above this level, then this option premium will become 0. That is the reason I always tell you that please avoid trading in OTM. Always trade in ATM as well as ITM only on the expiry day, so that you will see very less premium decay. Okay, let's take an example today. One of the trade. Let's Titan. So let me open the chart of a Titan here for you. So I'm opening a chart of a Titan for you here. So if you see here, based on any methodology which you are following, a simple support and resistance like this. Okay, there's a resistance formed like this, and there's a supporting area here. See, at least 3 times resistance is faced at this line. So this is called as a resistance line. And 3 times support is taken here. Support 1, support 2, support 3, support 4. This is called a supporting area, right? And there is a breakout of this level. So we take an entry here. So this is according to one of the method. Or you can also call this as a descending channel pattern, or a descending triangular pattern, channel pattern. So it's descending, finally given a breakout here, right? So this is also can be traded. So it's not the methodology which we are concentrating here right now. I am trying to help you to concentrate on which option strike price to trade today. Let's say I am drawing a support and resistance line here. Okay, and I am planning to take a trade here. So when will my entry come? My entry will come here, right? At this point, my entry will come. At this point, my entry will come. So this is my entry point. Exactly, this is my entry point. Now, once I enter, what is the stop loss? Stop loss will be the lowest of this candle will be the stop loss, right? The lowest of this candle will be the stop loss. So I go here, I choose here, this will be my stop loss. Stop loss is to stop your losses, right? So this is my entry point and this is my stop loss point. For example, somebody want to trade in equity. Where he will buy, you just see the right side. What is the price range? 2,512 is the buy price. 2,512 is the buy price here. Exactly, 2,512 is the buy price. The stop loss will be this one. 2,497 is your stop loss. So if I write it down for you, here, equity. So equity, where will you trade? 2,512 is my buy price. So I will buy at 2,512. And what is my stop loss? Where will I keep my stop loss here? According to this candle breakout candle low will be my stop loss. So it is 2,498, right? So I will write down 2,497. I'll give one more point buffer. So 2,497 is my stop loss and 2,512 is my buy price. So this is very straightforward, which is equity. So what is the risk here? What is the risk involved in this trade? What is the risk involved in this trade? If I open a calculator here, 2,512 minus 2,497. So 15-point risk. How much is the risk? 15 points risk. Okay. So how much is the reward you are getting? See, for example, 2,512, the highest point made is 2,596. So if I go here and mention what is the high point? So what is the high point? So let me go here and write down day's high. Day's high is 2,596. 2,096. So what is the reward? Max reward. We can't exit every time at a maximum point, but just taking an example, how much reward you're getting today. For example, 2,596 minus, what is the entry points? 2,512. So 84 points is my reward. Almost 5 times, 15-point risk, maximum reward is 85. So minimum risk is at least 15 points you need to take, right? Next 5 minutes itself, you got the profit already. This much is the risk, this much is my reward, easy. 1:1 target easily would have got. So if you want more target, 4 times, 5 times, also profit are coming for you. Now, this is how you trade in equity. Now coming to the option. So since it's a breakout trade and a bullish trade, see, it's a breakout trade and a bullish trade, what we will take? We will take a call option, right? We will take a call option. Call option will be taken when we see that the trend is bullish. So here the trend is bullish, hence we are going to take a call option. So now coming to the point to discuss and decide which strike price should I choose. See exactly what I'm trying to show here. See here, if I draw a line here, 2,512, this is the price at the point where I want to buy. Where I want to buy, that is the price where I want to buy. So the nearest strike price you buy, that is called as ATM option. The nearest strike price is the nearest whole figure. The nearest whole figure, let me open the Zerodha terminal for you. See, this is a Zerodha terminal for you. If I open here, if I open a Zerodha terminal for you here, so if I go to Titan, what is the running price here, Titan? What is the price here which I have to buy? 2,514. Go and type Titan 2,514. Is it there? Not there. So what is the nearest available price? 2,500 CE. So 2,500 CE will be at the money strike price. So 2,500 CE I'm adding to my term. If you see here, 2,513 was the price running. So at that point of time, if I have to take a trade, I will be taking in 2,500 CE. Let me open the option chart of 2,500 CE for you. So this is the option chart of 2,500 CE. How to open it? How to open it? Very simple. You can go to your Zerodha terminal, click on chart here. Just click on chart. The chart will open up for you. So if I go to the chart here, when did our trade came? When did our trade came? If I go here, our trade came at 9:20 a.m. 9:15 candle closed. Means 9:20 a.m. is our trade. So you go back here and check. What is the 9:20 candle? What is the buy price it's showing? 8:19. So if I mark here, this is my buy price. So now I'm checking the option price here, 2,500 call option. So what is the price I'm trying to buy here? What is the price I'm buying here? I am trying to buy here at 19 rupees, almost 19.2. So I mentioned here, this is my buy price. 19.2 is my buy. And stop loss, like I said, this lowest of this candle is my stop loss. Right? According to this point, lowest of this candle is stop loss. So lowest of this candle will be my stop loss. So this stop loss will be around 12.7. So this is my stop loss. So 19 is my buy price, 19.2. Stop loss will be 12.7. So I note down here. Note down here, 2,500 C I am going to buy. So what is the buy price? Buy price is 19.2 and stop loss is 12.7. I'm going to give 20% buffer, 12.5. So what is the risk here I'm going to take here? Risk equals to, what is the risk, guys? Let me go to calculator. 19.2 minus 12.5. Which is 6.7 rupees risk. So 6.7 multiplied by what is the lot size? What is the lot size of Titan? 375 is the lot size. Means the minimum 375 you need to buy. So I go here and multiply it by 375. So 2,512 rupee risk. So let me mention the lot size also. Lot size is 375. So what is the risk? Risk equal to 6.7. 6.7 multiplied by 375, which is equal to 2,512 rupees risk was there to take this trade. If you are taking a trade today with one lot morning, as per this strategy, the risk will be only 2,512 rupees. And what is the reward? What is the maximum point it went? Let me check the option chart here. This is the option chart. See, 2,500 call option. The maximum point it went is 94 rupees. 94. Can you imagine? So if I go here, max reward is how much? How much it went? 94. So max profit, how much? Max profit, how much? Equal to 94 minus our buy price. What is our buy price? 19.2. 19.2 multiplied by 375, which is a lot size, which is equal to how much? Which is equal to 94 minus 19.2. 74.8 points multiplied by 375, which is 28,050 rupees. 28,050 rupees profit. What was the risk? The risk was 2,500. The reward is 28,000, 10 times of it. This is called as a quality trade. This is called as a quality. This is how you need to pick a profitable trades. A profitable trades and a proper risk to reward. Was there no risk in the trade? Yes, there was a risk of 2,596. There was a risk of 2,000. For example, how much was the risk? We take 2,000 rupees, 2,500 rupees risk was there. 28,000 reward is there. So this is possible. So we traded in at the money strike price. So if I go back to the chart, this area, wherever the stock I am taking an entry at this point of time, that is called as ATM. If I choose here, at that point of time, if I choose this one, for example, 2,540, that will be my OTM. At that point of time, that will be my OTM. And if I choose here, if I choose below one, somewhere 2,480 something, this will be my ITM. So either you would have chosen an ATM or an ITM, but not OTM. Because see, if the trade only went till here, you could still make profit in this. If the trade only goes till here, you still make profit in this, but you could have not made a profit in this if the price doesn't move above this line. This is the reason I'm telling you, always use at the money strike price. And always work with one strategy. For example, let me show you how we use a strategy called TTM power range. See, I just added one of the signature tool, which is TTM power range. One breakout candle above this dark blue zone, which is our breakout strategy. So this is where a breakout is happening. So what we do, we just go and take a trade here. We take an entry here. If I want to trade an option, I will choose 2,500 option, which is at the money strike price. And my stop loss will be lowest of this. This is my stop loss. How simple it is. So we take an entry at this point. Our stop loss is this point. So I am taking an entry at this point. My stop loss is this point. What is the risk? So if I choose a risk here, my risk is this much. My risk is 12 points. What is the reward I'm getting here? Maximum reward I'm getting here is around 6 times. The money has moved 6 times of profit. So this is how you do a proper trading method. So by using proper at the money strike price for trading. So hope I have answered your questions today. Hope you answered your questions today. Most of the people keep on asking these questions, sir. Which strike price should I choose? Simple answer for you, at the money strike price. Choose whatever the price is currently running, nearest to whole number. For example, 2,510 is running, choose 2,500. 2,525 is running, choose 2,520 call option. 2,545 is running, choose 2,540 call option. Similarly, if market is falling down, if for example, stock is falling down like this, then you will choose 2,480 put option, 2,500 put option. This is how you trade, by choosing a proper risk to reward, right? If I choose a Nifty now, if I choose a Nifty index now, it's pretty clear. For example, a pretty clear here, Nifty trade morning itself has come here. putting zone here. So if it all you have traded at this point of time, we would have traded 18,050 call option. 18,050 call option at this point and place a stop loss at this point. And you know 1:1, 1:2, 1:3, 1:4, and 1:5 targets are done. Means risk to reward, right? Similarly, if I go day before again, so there's a breakout happening here. So I would have taken an entry here. I would place my stop loss here. See the risk, only this much risk, and see the reward 1:1, 1:2, 1:3, 1:4, and 1:5 risk to reward. So this is possible when you follow something, any strategy. So I'm not saying use this strategy, any strategy, a simple support and resistance, simple trend line. For example, I just draw a trend line like this. Even if you know how to use a trend line, every time it comes here, you can buy, 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 right? 5 times an opportunity. If I drag this down 6 times again, here also there is an opportunity. This is what it is. It's a trend line, right? It's not about the strategy you are going to use at the end of the day. How well you're trading, how much risk you're taking, how much reward you're looking. So always use at the money strike prices and use in the money strike prices during the expiry days. Hope I have answered your questions. If you have more questions, please put in the comment section so that I can come back and answer some of your questions. And please keep following our channel, like and subscribe, and also share to many as possible to come up with more learning videos. See you once again in yet another video with more learning.